Hey, what's up, you guys? Welcome back. Merry Christmas, happy holidays. So I know this year's been kind of a tough year, both in the stock market and just in the world in general. So I wasn't really in the mood to go big. I know last year I did a Christmas special, but this is going to be the Christmas special this year. I did put up some decorations in the background. So yeah. Anyways, this video is just going to be about Tesla, but with a sprinkle of Christmas in it. So I know Tesla stock has fallen really hard recently, and I know at least one of you wish for Santa to bring us all cheap Tesla stock, in which case, congrats, you got your wish. So anyways, to celebrate all of that, I'm going to take a swig from the Tesla bourbon as well. So I also got the limited edition Tesla glasses, which looks like this. In case you guys have not seen it, it comes with the same kind of stand as the Tesla bourbon. So I'm going to use one of these glasses and take a swig before we begin. All right, cheers to Christmas. And excuse me if the rest of the video I get a little bit more visibly inebriated as the video goes on. Okay, I'm back. Anyways, today's video will begin with a story. So stop me if you already heard this story before, because I think I told it once or twice in previous videos, but I'm just going to tell it again, okay? So picture myself in 2019, summer of 2019. I was still in university at the time, and as some of you know, I went to the University of Waterloo in Ontario, Canada. And Waterloo does this stock pitch competition every year that's run by the UW Stock Pitch, by the UW Finance Association. They do this UW Stock Pitch competition. So for the competition, you have to prepare a slide deck where you have to present your bullish thesis on a stock. So the only stipulation is that it has to be a long thesis, meaning that you can't bet, like no shorting, you can't bet it that it will go down. And it has to be a publicly traded company. So naturally, I picked Tesla. And I'll show you some of the slides that I made from that slide deck on screen right now. In my opinion, I did a pretty great job, okay? And at the time, I believe Tesla was trading for around $250 before all the splits that they did in this year and in the year before. So yeah, they've gone through some stock splits since then, but split adjusted though, it would be 15 times less than 250, right? So it would be about $16 to $17 ish in today's prices. So right now you see people panicking because the stock went from 300 to 125. But what if your cost basis was 17, right? So that's what you would have gotten it for if you bought in 2019. So I have my reasoning for Tesla, and I was watching Tesla all the way back in 2019. It's all in the slide deck. I submitted it, and within 24 hours, they rejected my submission. And they didn't even let me compete that year. So within 2 years of me making that slide deck, by the way, Tesla stock did a 20x. So in the end, who was right? Right, so the whole UW Finance Association, some of them who are now working at big banks, they're, I would imagine a lot of them are at least some of the smartest people in finance that are working professionally, and they were all wrong, and I was right. And I'm not trying to brag, I'm just saying some facts, right? So somebody at some point from the UW Finance Association took a look at my slide deck and was like, nah, this is all BS. And look what happened, right? Of course, I did not predict that the stock would do a 20x. I predicted that it would do a 3x. And imagine if I did write in that slide deck that I believed that it was going to do a 20x. They would have rejected it even faster, right? But the whole point of this story is don't always believe what Wall Street has to say, okay? So Wall Street has shown time and time again that they're just as emotional and irrational as retail investors. And what I'm saying right now is that I believe, in my opinion, this is not financial advice, by the way, that Wall Street is being irrational again on Tesla, just as they were in 2019. So I'm not saying that it will do another 20x. I think it would be great if Tesla did, but eventually they might. But in the short term, I don't think they're going to quite do a 20x. But let's just say I believe that Tesla is going to be worth a lot more in the near future than what is trading for now. And to justify that, let's go through some numbers. Okay, so this is a slide I stole from Invest Answers, so credit to him. But this is Tesla since they were added to the S&P 500 in 2020. And as you can see, deliveries have gone up 185%, revenue's gone up 175%, net income's exploded, it's gone up 1,800% or almost 1,900%, and the share price has declined by 40%. So does that really make sense? You can argue maybe in 2020 was super overvalued and that's why this is the case. But what I'm saying is that fundamentally, Tesla is a lot better now compared to where it was in 2020, and yet the price is much lower. Talking more about valuations, if you want to talk about price to earnings, Tesla is now at a forward PE at about 24 according to Yahoo Finance. And this is not biased information because Yahoo Finance pulls it from analyst consensus, right? So some, like Wall Street analysts, as you guys know, and as I keep saying, some of them are bullish and some of them are very bearish on Tesla, right? So, the consensus is that the forward PE is about 24. Since forward PE rely on estimates, I think you can make the argument if you're super bullish on Tesla, that's already under 20, as some people have been arguing. But let's just say it's 24, right? And now I think it's important to take a pause and let me explain something, because if I don't, then I'm going to get a ton of comments on it. So some people will always be like, look at other automakers, right? They're trading for a lot less than half of the forward or current PE of Tesla. So a forward PE of Tesla of 25 is still rich. So to those people, I have to say, you're actually missing a large part of the story, right? So look at the growth of Tesla compared to others. So we're talking about a company that's expected to grow sales at almost 40% and EPS by almost 35%. And if you don't think they're going to hit those numbers, well, let's just put in a little bit lower of a number. Let's say that EPS comes in at 30%. So remember the PEG ratio, or the PEG ratio as it's called. So for those of you who don't know what a PEG ratio is, PEG ratio is basically a price to earnings growth ratio, or it's called the price to earnings growth ratio, and it compares the PE ratio to a company's EPS growth. So at a 25 PE for next year, if you divide by 30, because let's say that it's going to grow at 30% instead of 35%, you still get a PEG of under 1. So typically companies that have PEGs of under 1 are considered undervalued. But again, that's just one metric. I could go on and on about other valuation metrics, but I don't want to bore you guys. I just want to say that you should not compare Tesla to other automakers. That's not an accurate that's not an accurate comparison, because Tesla isn't just a car company. So if you think about it, Tesla is actually a renewable energy ETF and a software ETF all by itself. So Tesla is a market leader in EVs, in batteries, and EV infrastructure, i.e. charging, and factory and assembly lines. So think of the GigaPress, which is a machine that Tesla basically invented to manufacture things like the Cybertruck and stuff like that, because the machines like that didn't exist, so they have to actually make their own machine that builds the machine. So that's tremendously valuable, but nobody really sees it because it's inside the factory, and as consumers we don't deal with that on a day-to-day basis, so people tend to ignore it. But that's very important to Tesla, that they're able to invent machines and streamline the assembly lines. So factories and assembly lines, that's another one. Solar energy, right? They have their solar business, robotics and AI, which granted is very early right now, but that's another thing that they're working on, and Wall Street is basically pricing that segment of the business at zero. So if you buy Tesla stock, it's kind of like a call option on the future on robotics and AI, because if it does become a big business, then none of that is priced into the stock right now. And lastly, insurance tech and the new car selling model, i.e. no dealerships. So I think that's another revolutionary part that people tend to ignore, is that Warren Buffett made his first big kind of return off of insurance, right? So Tesla is able to do insurance in a way that is better than other traditional insurance companies because they own the vehicles and they own the data that comes from the vehicles, right? So they can know, okay, this driver is dangerous, so we should charge them a bit more in premiums. But this driver is safe, so we'll charge them a little bit less, right? So once you integrate data into insurance, I think that's a huge business, and that's one area that people are not really paying attention to right now. You have companies like Lemonade who's trying to do it, but Lemonade stock is falling through the floor, and like people just aren't interested in that right now. But you get that like kind of for free when you buy Tesla stock, right? Because people just think them as an EV company, but people don't really pay attention to the insurance portion, which I think could be a big business. Anyways, I believe that Tesla right now is at one of the best risk to reward ratios ever. And you heard that right? I said ever, right? So in 2019, I gotta admit, there was a lot of uncertainty, right? So even though the rewards would have been great, like if you bought in 2019, the risk was also great. So that's when they first rolled out the Model 3. And they were still building the Shanghai Gigafactory, so that wasn't ready yet. And then they announced a Cybertruck with mixed reception, right? So initially, people were really mixed in their reaction to it. Some people liked it, some people absolutely hated it. As I said, back then the potential reward was big, but also the risk was big. If you look at Tesla right now, it's a completely different company. So now they're loaded up with cash, with no debt. So with no debt means that rising interest rates don't really fundamentally impact them because they're not borrowing money, right? They got the Model Y out. The Shanghai Gigafactory is fully ramped. Austin and Berlin Gigafactories are built and they're ramping currently, and they're going full speed ahead. Basically it's just a completely different situation compared to 2019 for Tesla now. So the company's fundamentals are skyrocketing, right? They're doing this while the price is doing this. Why, you might be asking? Because people are afraid of the Fed. To me, that doesn't make sense, right? And the Fed is almost done raising interest rates anyways, I think. So what more can they do, right? They can go to 5%, sure. They can go to 6% if they want. For the federal funds rate, sure, that's going to cause a huge recession, but if they do that, then they're going to have to drop interest rates down to zero and print money again when the economy completely is destroyed, right? And what I'm trying to say is that that's just how the market cycle works, right? You can't really let the Fed dictate your actions 100% of the time, because fundamentally, if you want to trade or if you want to own a company and invest in a company for the long run and not just want to trade, then you look at the fundamentals of the company instead of looking at the Fed, right? That's just my opinion. Back in 2019, though, I had 6 shares, to which, after all the splits, you times it by 15, right? And so now it turned into 90 shares. My regret is that back then I was a poor university student and I didn't have a job and couldn't afford that many shares. But I'm proud to say now that I own more shares of Tesla than I have ever owned before. And at these prices, I'm going to continue to add because I just think it's a fantastic Christmas gift. So again, not financial advice. This is just my opinion. I'll leave the video here for now. And if Tesla stock continues to drop, I might talk about it more, but you guys know my plan, right? So I'm just going to continue to accumulate. So Merry Christmas again. Be sure to give this video a like if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter. My link is down below in the description. With that being said, I'll see you guys in the next video. Bye-bye.